The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 13th, wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. I know I did. And let's make sure that you and I, that we do all that we can do to have a wonderful Wednesday. And I'll do all that I can during the next couple hours because my outcome, well, it's to share with you extraordinary tools for helping you to understand where price is moving to for your trading and investing. We'll utilize tools like that lightning bolt pattern, the A to B equals CD pattern. We'll take a look at Fibonacci expansions and retracements. You know, it's the two of those patterns that help us to design the Gartley and butterfly patterns out there. We'll utilize Japanese candlesticks because the bulls and the bears, they have to go to work each trading session, and they'll leave us signals as to what the markets are going to do out there. And, of course, as you and I know, trading is 80% psychological. The other 20%, well, it's just stuck somewhere in between our ears. This show, it's interactive. As all the shows here at TFNN, you know, we start programming at 8 a.m. each day. Our man John Logan kicks us off, and we run through 6 o'clock in the evening out there. So it's an interactive show. That means you can give us a call. Now, each of us understand the anxiety involved with calling into a radio talk show. Even us as hosts have a little of that anxiety, or at least I can say even myself. So I understand that. But just give us a call because you and I, we can go hunting for bulls and bears. Our call number is 877-927-6648. Internationally, it's 727-445-1044. And let us remember this, folks, that everything in life happens for us, not to us. And in the end, it serves us. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures. They're trading up 31 points, trading out at 16,550. S&P Futures up 5 points, trade at 1935. NASDAQ up 13, trade out at 39.16. Russell 2000 up about 3.5 points, trade at 11.33 or so. King Dollar back 130 ticks, down 13 pennies, trade out at 81.42. Goldilocks up about $3, trading at 13.13. Silver up 8 cents, trading at 19.98. Light sweet crude is up 8 cents as well. She's traded at 97.44. A quick peek across the globe out here. Sometimes I mess that up, and sometimes I don't. But as we take a quick peek across the globe, we'll see the DAX is up 84 points right now. The FTSE is up about 7. She's trading at 66.39. A quick peek in on the DAX out here. What we'll see is the DAX, even though it has had a decent bounce out here, still not above the highs from the trading session from August the 11th. If it can close above that level, which is 91.99, it could set up a small A to B equals CD to the upside. But at this stage, still in bearish formation. You see these, if you're watching this on TigerTV, and thank you so much for doing that. If you listen on the radio or your mobile device at TFNN.mobi, don't forget, and we appreciate that as well, but don't forget that you can always come over to the homepage at TFNN.com. You can click on the upper right-hand side. You'll see a little banner, a little button with 3 smartphone-type devices out there. Click on that. The show will stream live. Of course, the show is archived. You can catch that archive on Channel 9. And if you are watching, you're going to see a couple little crossover, little kind of chartreuse, pinkish and white moving average lines out there. It's the DAX is still in bearish formation. What is it going to take in order for that to switch to bullish formation? Well, you'll need to see at least this lagging indicator, and it's a relatively quick lagging indicator, by the way. You'll need to see a bullish crossover, and the DAX most certainly does not have that. What we do know about the DAX, it was moving into the extreme sold conditions. So far, really just working its condition off by moving sideways out there. That is the message of the DAX. Over in Asia last night, green across the board. The Nikkei up 52 points. She closed out at 15,213. The Hang Seng up 200 points, up about 0.8%. It closed out at 24,890. And the Shanghai up 1 point, closing out at 2327 out there. Again, our call number is 877-927-6648. All right, let's go check out the market, see what's going on out here. Let's go take a look at the 120-minute charts out here. Let's look at the 120-minute charts for the ES Mini, get a feel for what's going on out here. As we take a look at the 120-minute chart, what you're going to notice and we've had a nice bounce so far off of the bottom. In order for these markets to just get downright bullish out here, which you'd like to see, so we're going to go looking for bulls and bears, but I think it's incumbent upon ourselves to always look at both sides of the trade. What you'd like to see here is a break of the descending price channel. That's the blue diagonal line going from upper left to lower right across my screen out there. So that's the first thing, and that price channel is coming in off of the, in essence, off of the highs. Again, we're using the body of the candle. We're not using the wicks of the candle. We're using the bodies. We're trying to identify, in essence, the largest number of either opens or closes of those candles, co-located opens and closes. In this case here, it takes us back into the trading session of July 24th. That becomes our beginning point for the upper boundary line, the upper trend line, the upper channel line is really what I should say. And we can see that price has a little bit further to go. Now, what we also can see out here, what I can see out here, is that as we are coming on the air during this trading session here right now, 10 o'clock, so we've got 45 minutes. We'll see how these markets are going to open. But what the bears are trying to do is the bears are trying to form a little bearish engulfing bear sash candle out here. It's a pre-market. So we'll see what transpires. You can also see this little sub-correction price channel as prices moved off of the bottom of that descending price channel up to the top out there. A breakdown below this level here would suggest, okay, at least a retracement may be underway. So that's what the 120-minute chart for the ES Mini is showing as we speak right now. Again, that 120-minute time frame, that does not complete until 10 a.m. Let's also take a look at the 120-minute time frame here, as soon as I can find it, for the Dow futures out here. I got daily, I got 300-minute, but where did Stevie hide his? Oh, it's right over here in the right-hand corner. So let's go take a look at the Dow futures, see what their signal is. Now, you've got a similar type of descending price channel. Inside the Dow, this is really taking us back into the time period here of about July 24th as well. So that's the blue diagonal lines going across my screen. And it, too, is forming a bearish engulfing bear sash candle. But we got a lot of time left in this trading session. You'll also see that price is not broken above the descending price channel. Price has tagged or very close to that 200 period exponential moving average. That's priced out at about the 16,600-ish type level. Price is above its market profile high out there, which looks like it's about 16.551 out there. Yeah, I could put on my goggles, my glasses out here, but actually my goggles are more for seeing further away, and those numbers were just a little bit difficult to read. So that we can see here during this 120-minute time frame session that so far price has gone down and tested that area. So old resistance becomes new support. So we're going to really see the battle lines really here inside the Dow futures. I'd say they're pretty well drawn in the sand out there. If we see price dip back below 16, close below, I should say, dipping's no big deal out there, but close below 16,551, then we should see a beeline for the lower part of that descending price channel, and that is what's going on inside of the Dow futures. As long as we're over here, we might as well go take a look at the NASDAQ, but let's go take a look at the NASDAQ on a different time frame basis. Let's take a look at the Rhodes momentum signals out here, but instead of using the ES, let's go and take a look. And we're going to look at the continuous contract here for the NASDAQ. This is the most one of the most bullish charts out here. I'm using the continuous contract just simply so I've got plenty of data, because the upper portion, the upper panel of the screen that we're looking at here, that's the weekly chart. The lower panel out here is the daily. So this way it gives us a feel as to what's really going on. Now, the hurdle inside of the NASDAQ is the week year ended August the 1st. There we go. Good. August the 1st. All the damage that was done out here, which formed that bear sash candle, all that took place on July 31st. Nonetheless, that becomes resistance, and really it's the high of the prior session. The week ended July the 27th. Now, the high of that session is 39.9125. You're trading at 39.17 right now. You can see last week's candle, a little doji candle, a little indecision out there. But as price was moving lower, it just meant that the market had lost its way Price inside, if you take a look at the NASDAQ, there really is not much to show that is on a weekly chart that shows much in the way of being bearish. Cautious? Yes. Bearish? No, I'm afraid not out there. Now, daily chart, a little bit different story out here. That little bit different story, and that's the bottom portion of my screen out here. We take a look at the daily chart. The black line is the 50-day exponential moving average. And right now, inside the NQ, it hasn't been able to get above that. And it really should be able to get above that level, which is right around, looks like 1936.50. Maybe that's what we're trading at right now. So it's trading right in there. So today, a close above that 50-day gets it back into a bullish formation. Also, let me see if I can expand this up just a tad. Well, I can even do this here. I can just raise it. I can raise the bar, just like each and every one of you want to do out there. It's still in bearish formation cross with regard to its quicker exponential moving averages out there. So a little suspect here. A little bit of trouble inside of the NQ. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the futures market out here. Let's go take a look at some things that are popping and dropping in the marketplace. We've got Amazon, AMZN, the ticker symbol, trading out right now at 328.03. I don't know it's the news behind it. Nonetheless, does it really matter? We're going to take a look at the technical chart pattern out here. Now, what's interesting about Amazon, if it actually does open at 328 and change out here, it's a high that we're dealing with is from the trading side. Now, Amazon had gapped down with some big volume July 25th. Volume behind that move was 17.8 million shares. And the top of that is 324.87. Very next day, the top is 324.82. So it's at 324.87. Now, it appears as if Amazon is going to open above that. Don't know whether it will or it won't, but if it does and ever touches 324.87, Amazon will have created a little bit of a island bottom reversal out here. So we'll see what it does. It's got, some supply that it needs to work off. We'll see whether really the real key to Amazon is going to be what happens when it gets back, if it does move higher up into its most recent swing point. What happens when it gets back to the bottom of that area? That's the low of 358.52 out there. So we'll see how Amazon trades here. And that is leading the charge dollar-wise to the upside. We've got Canadian Solar, CSIQ is the ticker symbol. It closed at $24.97. It's up about almost $3. $27.37 was the last trade. Let's go see what that is going to trade into. Looks like its most recent swing point out here. Canadian Solar made a swing point back on July 7th. And the low of that is $29.54. The high is $32.14. What did I say? It's trading at $27. So it looks like it's targeting that level. Volume out there in Canadian Solar, it has more of a high volume low that was tested. The high volume low was formed May 16th. The very next day, I don't really call that so much the test out there. That's actually the swing point, quite frankly, is May 19th out there, and that's got volume of about 5.5 million shares to the downside. This equity here has been in a very significant downtrend. What I would do, I would have to say a breakout of this, a change of the trend, so to speak. We'll just take the swing point here from the trading session. Well, let me just try to grab that here. Let me get the tool going. Come on, grab it. There we go. All right, now we'll grab it. That's the February 28th candle session, and I'm just going to use as the high. Let me see if I can grab this here. I'm using the high of July 7th. So we'll see what happens as price tries to hit that trend line, and that is Canadian Solar, CSIQ, as the market opens. Also to the upside here, we've got Live Deal, Live, closed at 385, traded 491 out here. Looks like they've had a 340% increase in net revenue. So let's go see what this is doing. Trading at 491. It's got a high volume high out here, and it had a nice sign of strength off of the bottom. This is back on May 23rd. So now that high volume high is all the way up here at about a price point of $11.94 down to $9.48 out there. But the first thing that it needs to overcome is to get up over this high volume session for May 28th. That price level is $5.34 out there. We'll see if that acts as a supply line or if price can catapult and get over that. How about that Kate Spade yesterday? Kate Spade was spayed and neutered all in one trading session. Take a look at that candle session. You want to talk about reversals, bearish engulfings, and the whole 9 yards out here? I cannot recommend you getting involved with Kate Spade out here. It came all the way back to its, in one trading session, made its way all the way back to February 5th. With monster volume to the downside out here. So I've got no idea what they did report, but that is a one nasty-looking candle session out there. That is on Kate Spade. what is it? It's Kate. It's K-A-T-E. Forget about the S-P. To the downside out here, we've got the SeaWorld. S-E-A-S is the ticker symbol. SeaWorld right now trading out at $20. Oh, off $8. They had revenues of $400 million versus $411, so a little off on the revenues. Net income not too shabby. $37 million profit versus a $15 million loss, but maybe there's something inside those books. Nonetheless, it's trading out at $20 out here, and that's going to take out a swing point, its most recent swing point from just a few days ago, August the 8th. That low out there was $26.69. So let's take SeaWorld back. Let's go figure out where Shamu is here, because Shamu is jumping into the water and is creating a big splash to the downside inside of SeaWorld out here. I've got the weekly chart out here, and everybody that's going to be inside this equity, looks like maybe this came back as a IPO, SeaWorld Entertainment, back on April 15, 2013. And then this morning, everybody's going to be in the red out there. Not a good scene. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say You can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 52 points. She's traded out at 16,613. S&P up 8. 9 points, traded 1942 and change. NASDAQ up 20 points, traded at 4409. Russell up about $4, traded at 1136. NDX 100 up 20 points. She's trading out at 39.25 out here. Gold up $3, silver up 9 pennies. And back to the Amazon chart. Amazing Amazon. It did gap up this morning, and the low so far in the trading session is 327 even Steven. So long as it does not tick down into the price level of 324.87, it will have created that little island reversal pattern out here at the bottom. Very, very interesting, as Colonel Klink would say out there. So that's about as bullish of a pattern as you can get inside of a marketplace out here. Now, Amazon, if we take a look at its retracement level from the low that was formed back here on May the 9th, 2014, all the way up to the high that was recently put in here on July 24th, we'll see that price had gotten down to basically the 0.786 level. The actual number would have been 301.60. The actual low came in so far in the trading session of August the 1st. It got down to 304.59 out there. So it's got a nice little island reversal. That is on Amazon. If we take a look at the weekly chart out here, for Amazon, never did make its way back to its long-term trend. So from a intermediate term standpoint, let's see if this will populate. There we go. From an intermediate term standpoint, and where I'm coming back to, let me see how far. Yeah, I was coming back into the 2008 time frame, I believe. Let's take a little trend line there, and what we will see is that Amazon still is in that nice big uptrend ever since that time period out here. There we go. Take a look at this, and that really was the trend line. And anything can happen, right? That's really the trend line that I was looking for Amazon to move down into, especially because of the higher volume that it had moving to the downside out here. And the A to B equals CD patterns that it has formed. Was really looking for that to be the test. And maybe that'll still come to fruition out here. What's interesting as time proceeds out here, the level would have been its unfair low, its TAS market profile unfair low, which is priced out at about 290.77. But that ain't going to happen today, and it does have on a daily basis, it does have an extremely bullish chart pattern out there, and that is on Amazon. Let's continue taking a look at some things here that are moving in the markets. King Digital, KING is the ticker symbol. Now, this thing looks just absolutely horrible. This is also a IPO. So we looked at SeaWorld, down 26% this morning. Nobody that's inside that equity is in a profit position. That's a horrible thing. In the case of King Digital, it's really the same thing. So this had a IPO date was March 26, 2014. Price ran anywhere from $18.90 up to about $21.39. It's trading at $13.78 right now. Hey, there's not enough information on this stock chart to understand where price could go to. Just not enough data. But what we can say is, other than maybe just a few folks that have bought here in the last minute or so, are in a losing position. And probably those folks in a Boston last minute or so will probably end up being in a losing position by the end of the day. Nonetheless, that is what's going on with King Digital Entertainment out there. I think they're the makers of Orange Crush or something like that, Candy Crush, something like that. Something that a lot of folks play with on their phones. Moving to the upside out here, we've got Fleet Core Technologies. FLT is a ticker symbol. Looks like Comdata is going to be acquired by Fleet Core out here, so that's what's making that equity move. It's jumping right into a swing point out here. Its most recent swing point is from July 30th, 749,000 shares out there so far, up with volume 368,000 shares or so. So let's take a look at Fleet Core, see what it is doing out here. Pretty bullish looking stock chart out here. I don't see any real significant selling to the downside. Looks like it's got probably a couple of confirmed A to B equals CD patterns out here. Let's switch over to the weekly chart and take a look at the little bit longer term time frame, get an idea for where FLT is headed to. Whoosh. Man, that weekly chart, that looks pretty darn good. So this thing actually was in a bit of a consolidation here. That's really the measured move that it is in, but let's take a look at the A to B equal, the shorter term A to B equals CD tool. In this case, I'm just going to use the A point down here on January 27th. That's going to be my A. My B point's going to be the high out here on February 24th, and then it was going to be until I messed that up. We're going to start that over again. Okay, so I'm going to use we're going to use this as our A point. That is October of 2013. Here's my B point, and the C right down here. Come on, grab it. There we go. And so, it already hit the 1-to-1, but I have to say that it looks like if Fleet Core can take out the highs, this little high wave candle from July 28th, that high is 138.19. It's got volume of 4 million shares there. This week, it's only got 991 through. It could pull it off, but if it does get more volume, more than 4.2 million shares, Fleet Core ought to head to about 149.14. There's really nothing bearish about the stock chart as I take a look at it in a quick basis out here. Let's see, what else do we have moving? We've got LinkedIn. Let's take a look at LinkedIn and EMES. I was looking at Emerge Energy yesterday. Interesting. We'll take a look at that in a moment. LinkedIn here, I think it pays a fairly decent dividend. LNKD, though, it's trading up about 1%. Let's go see what it's doing on its daily time frame. Right now, completing and moving up to the 1 to 1.618 A to B equals CD that it has on its chart. Of course, that big gap up, wide-ranging bar, that was all on August the 1st, had volume of 10.5 million shares out there. So the actual 1 to 1.618 A to B equals CD. Price projection there of 216.56. Short of a reversal candle, LinkedIn looks like it wants to make a run for the 1 to 2 A to B equals CD pattern in the 231.49-ish level. Let me pull this back here and see. I guess I got to put this on a weekly time frame out here. So let's do that so we can get a better feel for where LinkedIn is headed to see if it's running into any kind of a supply line on a weekly chart. Boy, on the weekly chart, it's actually trying to get above resistance of its TAS market profile unfair high, and that's at 211.55. So a close this week of above 211.55. You can see how the red horizontal lines on my screen have really acted as, in essence, a form of resistance. We haven't seen a close above that area. No, you haven't seen a close above that since going back into the time frame of July in 2013. So closing above that would be pretty bullish. Now, LinkedIn has changed its trend line, most certainly. If you come from the high back here on September the 9th, the weekend of September 9th, and just use the trend line, what we can see is that it was last week that you could say it was the week before July 28th, but certainly last week where it had broken through that trend line. So all things look pretty good here for LinkedIn, and I think that daily A to B equals CD pattern is likely the target. The only level of volume that it's dealing with here is from the session the weekend of October 28th, but I don't see that as really being a huge deal out there. There were 21 million shares. Last week, only 11 million shares, so it's a little bit light on the way up, but that daily chart looked pretty good to me when we took a look at LinkedIn. Let's see what else do we have to go take a look at. Let's look at some things here to the downside in this market. So Myriad, or Myriad, that's probably the better name, Myriad Genetics, that's trading down 11% this morning, off $4 and change. So let's get a feel for where that is going to. Gapping down. It's had some fairly decent volume here yesterday. Did volume of 1.8 million shares, but today it's already done 428. So more volume here to the downside. It's got a little swing point. So this has been almost in a consolidation-ish type pattern out here. But it's breaking a swing point here this morning, a small swing point nonetheless, and that's from the trading session of July 28, 635,000 shares. As I say so far, 436. That small A to B equals CD to the downside. Let's go get a price projection on that. Your A point out here is going to be July 14th high. Your B point is going to be the swing it's taken out from July 28th, and the C point yesterday's high. It's already done, gapped into the 1-to-1. Says it's going to make a lower price projection move, probably 1 to 1.272 or even 1 to 1.618. That's down in the 33.39 to 31.68 level. And that is on Myriad Genetics out here. MyGen, MYGN, is the ticker symbol. And what it's going to do, let's take a look at the swing point here that it's trying to click. I'm clicking, and why is it not working? Click. Oh, never a good scene. Never a good sign there. Okay, well, forget that. We'll take a look at the swing point here that it's going to be moving into, kind of like a set of swing points out here. It's got the trading session from June 2nd out there. That's got 1 million shares. You've also got all the way back here where it had really its last sign of strength. Its last sign of strength was on the trading session of April the 2nd. Good volume to the upside, 7.5 million shares. So MyGen ought to find support down here, in the, we'll call it the 32.25-ish type area. That is, unless we see volume just totally blow out of this thing. And if we were to get volume in excess of 9 million shares today, then this thing would have some big problems in River City. Also to the downside, we've got CREE, C-R-E-E is the ticker symbol, off about 8%, down $4 right now. Looks like, there we go. I got a little bit of a data feed issue. It's not as bad as yesterday, that's for sure. So if we take a look at CREE, this thing looks pretty darn bad. This is the daily chart that we're taking a look at. It's trying to take out another swing point, so it's testing. They'll pull this back here, and then we'll take a look at the weekly time frame. So it's swing point that it's dealing with this morning takes you back to May 15, 2014. That low was 44.52. Volume down there only about 2 million shares, and so far in the first 15 minutes of trading, what this has done is 2.8 million shares. Not a good scene here for CREE, C-R-E-E. Let's put this on a weekly time frame, get a better scope for where this may be headed to, see if there's any kind of sign of strength on a weekly chart or swing point that this thing may be headed to. And the answer is yes. The answer is CREE actually broke out the week of January 21st, 2013. Take a look at that wide-ranging bar, accelerated volume. The week ended January the 21st, 2013. Now, the top of that bar is 42.76. It looks like that's probably its first destination. The bottom of the bar is 33.18. And at 33.18, let's just see here. If this week you were to see a close below, let's see, the low of May 19th, 45.29. That's the low, 44.52. So it's 44.52. So it's the May 5th low out there. And if we take a look at that A to B equals CD down and see what that price projection is, I got a little bit of, I have to do some investigation as to what's slowing this system down, because it's about the fastest computer you can get. I think I know what it is because I've got a ton of calculations going on. So I'll have to figure that out. Nonetheless, I can, as you know, I can get through anything out here. The A point out on this is the January 20th level. Again, the B point's going to be the 44.52 mark. That's the week ended May 12th, and just a shallow retracement here recently. That was the June 30th high. So you can easily see that this suggests CREE, C-R-E-E, is probably headed to 29.87, maybe even 23.49, but at that 29.87, that takes us right down into really the breakout area with inside this entire equity. So she's moving all the way back to where it broke out from, and that's back in the 2012 time frame out there. Again, that was CREE. If we take a look at, I did want to go take a look at that one equity, if it's still out here. Did it EMSU, I think? That popped away from my screen. So be it. But to the downside, let's take a look at Fossil Group, off about 3.5%, down $3.79 out here. Looks like they reported numbers as well, generating net income of $52 million versus $67, so a little bit light in the loafers there. And revenues were up. Revenues $770 million versus $706. Nonetheless, it's trading down this morning. Let's go take a look at where it is trading into. Trying to bust out a swing point here, trying to bust out another swing point, it looks like. The most recent one was from August the 4th. And that low is 97.29, 480,000 shares. It's down this morning with 365,000 shares. So that's not a good scene out here as this continued trend to the downside carries on. How about this? Looks like this may have been no, it's not. Okay, good. It's just a lack of, I hate that. What is it that I hate? That I've got a little bit of a delay feed out here in the data system. That is what Stevie dislikes out here. Now let's take a look and see where this is traveling into. We'll have to do it when we get back from the break. I'm looking at Fossil, FOSL, at one time a high flyer. Lately been flying to the downside. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 37 points. S&P's up 6. Composite up 17. So very important trading session day today, as they all are. But I'd say today is even more important, the close being the real key. Let's go back to the 120-minute time frame charts out here and just update ourselves on what's transpired. This is where we began the show. And as I say, that 120-minute bar doesn't complete for another 5.5 minutes or so. And this is the S&P futures out here. Still has that bearish engulfing bear sash candle, and so long as it closes below 1937.75 out there, it'll go ahead and confirm that candle. We'll pay attention. You can see this nice little rising price channel that it has established itself in. That's coming off of the lows out here, the lows that had formed last Friday. At about 4 o'clock in the morning. Of course, that formed one of our favorite reversal patterns. That's that Rhodes RMI price divergent pattern out here. Rhodes RMI. Price RMI divergent patterns out here. And, what it really looks like to me, it looked like to me what my expectation was that we'd see the ES Mini go ahead and at least pop into the top of the descending price channel, even get to at least Basil Chapman's peak D out there. That has not transpired as we speak, although the intra-session high so far has been 1941, and 1941 was the high back here at 12 noon on August the 10th. But we'll continue to watch the ES out here. I'm very suspect about the bullishness that really should have taken place yesterday that did not out there. I will reserve my overall thoughts on the market till I see how today plays out. So tomorrow morning I may be able to share that completely with you. But at this stage here, up towards a resistance level, you've got a bearish. The bulls and bears are out making signs, and the signs they're making right now are a bit bearish. Now, what's the real key level here? Well, if we were to take a look at a 120-minute time frame chart for our TAS market profile, that unfair low, that's at that's the support areas about 1932.50 out there. So I would say that's one area to watch. Of course, what Stevie would say is the real area to watch is 1923.50. Now that's ways down here, 1923.50, happened to be yesterday's low to the tick. But if we do see the ES Mini get below 1923.50, I will say this: don't be long. Yeah, that's really my meaning of the market, and I'll say don't be long, at least on the shorter term basis, on the daily time frame, and I could potentially switch over and say don't be long even on the intermediate term time frame. And it's been a long time since I have uttered those words. Well, we'll take things one moment at a time because we got a lot of day left in the trading out here. If I go back and take a look at the strong hands out here, that is the NQ. Let's go see what it's doing on its 120-minute time frame as well. And the NQ, it's not doing too bad. No bearish candle out here, and I don't think that we're going to see that take place here during the next 2.5 minutes, but anything could happen. We'd need to see a close below 39.16 out here. So I mentioned this before as we came off the bottom. It's all going to be about the NQ. It's all going to be about the NQ. And again, it's all going to be about the NQ. You can see this has been traveling in a new rising price channel out here. All it's done so far this morning is tested support of its market profile high and the bottom of its rising price channel out there. So until that gets broken, I'm going to chalk this one up that the bulls have the favor. But we'll see. We'll see what goes on. In fact, we may be able to see what goes on during the next hour when I join you. So join me if you're off to start your day. Have a wonderful Wednesday. As always, thanks so much for joining us here. Have a great trading session, a great day, and I look forward to seeing you soon. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.